Hey, and welcome to this week's weekly market update. It's September 30th and it's 9:32 a.m. in London when we are doing this market update. In the next couple of minutes, we are going to take a look at what happened last week, but also talk about which events are coming up. Plus, we're going to look at things like the um, charts to better understand how to navigate the markets. Okay, good. So let's discuss a little bit what happened last week. So China has made a big, bold stimulus package. Okay, and it's pretty much the biggest surprise. At one point, maybe something needed like this to happen. They have been trying to cut rates before, but not too much of a success. The Chinese manufacturing sector is suffering massively, and as you might remember, they had problems with deflation a couple of months ago. That means the prices were coming down, and it's not really too much of a great situation. We even have more data out this morning from China that showed us that the economy is not doing good at all and anticipated to be weak going forward. But what they did is that they embarked on this huge stimulus package, okay? And that effectively pushed stock indices up by 16%. This is just in 1 week. It also lifted the Australian dollar versus the USD and had a knock-on effect on other risk assets. Okay, so there's different ways of trading this. One would be there's a stock index called the China A50, and you also have the Hang Seng, which is the the Hong Kong stock index that can be used to trade. What is interesting is that sometimes when trends start going, they will, trade it up massively. Like we're talking about 100% sometimes. It's very speculative markets. The Chinese stock indices, they literally shoot up strongly for a couple of months sometimes, and then after a couple of years they deflate. So this could potentially be a very good trading opportunity. So you definitely want to check that out. So what did they actually do? Well, they cut rates by 30 basis points, while the reserve requirement ratios were reduced by 50 basis points. They used more than just interest rates than what we use here in Europe and in the US, okay? Plus, they're going to reduce mortgage rates by 50 basis points, so active on existing loans. In addition, there's talks about support the real estate and stock markets. That's interesting, when you go in and support the stock markets directly. Further to that, they're going to recapitalize the Chinese banks with up to 142 billion US dollars. So why is this last part important? Well, because obviously you can cut rates, right? But if the bank themselves are suffering, because imagine you are running a bank and you lend out to 10 people and say that 3 people here are not paying back, right? Then you are losing on those loans. And when you lose on the loans, that eats up in your own capital. And the banks need to stick to certain rules, which means that some of these banks clearly are not doing too good, okay? And if they're not doing good, then they can't lend out more money. So even if they cut rates to rock bottom, you can't lend more money. But this is obviously going to help. So this is all. The sum of it is that it lifts the stock market indices with 16%, and you definitely want to keep an eye on this. So what are we looking at for this week then? Well, we have the non-farm payrolls. We know that the Federal Reserve cares more about the labor market than inflation right now. And 130,000 new jobs are anticipated to be created, which is slightly lower than 142 in the prior month. The biggest problem with the NFPs, though, is that they always revise them lower. So they say it's 142, but if they say it's 100, it wouldn't surprise me one bit. Okay, so this is going to be crucial. And if indeed numbers come down, so say 99 or lower, then that could cement the idea that we're going to have another 50 basis points cut. And it's not so surprising to maybe see Euro USD pushing substantially higher on the news, AUD USD as well, and of course gold prices. Stock indices, though, they're in a bit in a tricky situation. Like I do think from a technical point of view that the S&P 500 should push higher. But, you know, at one point, people need to ask themselves, okay, they're cutting rates, but the people here that they're cutting rates for, they're also losing their jobs. Obviously, we're not there yet because the unemployment rate is just at 4.2. But at one point, that might turn the other way around. So then the rate cuts are not going to matter because we'll be heading into a recession. But for now, it's all good, and people actually buying stocks on these aggressive rate cuts. So how about the future then? We had market PMI data that was published last week. It's not manufacturing really in the US and Europe is contracting, which is not great. As well in Europe, we had inflation coming down quite sharply. Spanish inflation just increased by 1.7% year over year, while in France just by 1.5%. And that is increasing pressure on the ECB to cut rates. Okay, so big data coming out on Friday, as I said, and from payrolls. You have ISM manufacturing as well on Tuesday, ADP on Wednesday, and on Thursday you got ISM services. So here's your Euro USD. So last week we were bullish. We were looking to buy in a dip, but we didn't really dip low enough to be able to buy. I have now pushed up the buy area. So the new buy area is 111.31 all the way down to 110.53. Now, if we take out this level, it doesn't mean that we're going to tumble all the way down to 108, you know. You still have another support level here, but this is the short-term level because sometimes the price doesn't want to come down. And if it doesn't want to come down, then you can't actually get an entry. So I think people are going to be buying it between these two levels as well. Look at this. This is like a double top now. So there's some people there that are saying, oh, let's short on the break to the high here. Oh, sorry, let's short on the high. So I'm sure there's quite a lot of stop loss orders on the other side of 112. So if we break above here, you can have a breakout trade up towards 113. How about the Aussie dollar? So look at this. This is a massive wedge. And we triggered that a couple of weeks ago. And of course, this is a daily chart, by the way. Of course, with the news, it's just pushed higher. And the pattern on its own says that we can go up to 0.7189. So, and I think people are going to be buying between 0.6771 and 0.6857. So here people are going to be buying. But in general, with the news, we just want to be looking for buying opportunities, okay? So dips and stuff like this and consolidation breakouts to the upside, all of that is interesting, okay? How about the crude oil prices? So we addressed this last week as well, and we said we wanted to short sell because we have this massive wedge pattern, okay? Fortunately, it went a bit above that level, and any trade idea would have been stopped out. Why did it go up? Well, as you know, there's huge risk. I mean, there has already been escalations with the latest bombing of Lebanon, and there's a huge risk that Iran gets involved, and so this is not too good, and that obviously lifted stock oil to the upside. As well, we had the stimulus from China. China are big consumers of crude oil, so that lifted things that got us stopped out. And why did it go lower then? Well, it went lower because there's talks of Libya resuming crude oil production. There's also, for now, OPEC Plus, which is the organization of oil producers in the world, all of them except the US more or less, they will increase production starting from December. Gold prices, so we had a really good opportunity to buy here like 2 weeks ago, and then last week we're trading here. I said if we go down, I think people are going to buy. Fortunately, we didn't go down, we just breached to the upside. You can see this is a little rectangle pattern that could have been bought. Looking at this today, I'm bullish between 2,613 and 2,650. And here's the S&P, which is bullish. I'm bullish between 5,659 and 5,722, targeting last week's high, followed by 5,850. But this is a higher target here, okay? There is a big pattern that was triggered here around the 18th of December or so, which suggests we can go up with about 5%. And that target hasn't been reached yet. And that's it. That is today's market update. We'll do this as usual Monday at 9:30 London time, with the exception of next week. Next week, I'm going to be offline. So we will resume the weekly market update on October 14th. Now, if you have any questions, you really want to be quick and drop them in the chat. If not, we are going to wrap things up. So we're live on YouTube, and we're also live, of course, on Facebook. I have someone helping me here. So if you have any questions, we're going to cover them. Okay, so no comments at the moment. Okay, that's all good. If you're watching though, and if you like it, don't forget to like. You can drop a simple hello or something like this below. This is very important because if nobody's watching the presentations, then obviously we're gonna do less of them. So if you like it, support it. Simple as that. Share with people that you might think might find it useful as well. Okay, have a great week, and let's see how the market plays out, but it's surely gonna be an interesting one. Thank you very much, and goodbye.